This is your dose of daily market wisdom with master trader Nick Santiago. Starting from humble beginnings, Nick has been beating the markets for over 2 decades. He shares with you his take on the profitable trades that will have you moving towards financial freedom in no time at all. To see an in-depth review of his track record and much more, go to inthemoneystocks.com. Welcome. This is your daily dose of daily market wisdom with master trader Nick Santiago. I'm Kerry Lutz. Today is June 1st, 2020, and this is show number 45. And Nick, we had a lot of things going on over the weekend, a lot of civil unrest in some 40 cities across the country, and yet we look today, the market's up.
Yeah, it's pretty incredible. There was a lot of turbulence in the futures overnight, but, bottom line is markets are higher again today. And, again, this is why we have to use charts, because if you had watched the news or you're watching anything on television this weekend, it's getting interrupted by these protests and rioting that is going on all over the country. This is a trading show. We talk about trading and we've been talking about how the markets, the patterns are still good, and that's what you want to follow. And this is a perfect example of why you want to do that. So we're higher across the board. In fact, the Russell 2000 is once again leading the charge. Cash Russell's up 1.44%, and that's the strongest of the major indexes. And people always need to remember that the Russell 2000 represents small cap business in the United States. So when the Russell starts to show leadership, that's a sign of strength. And another area that's actually decent today is the financials again. JP Morgan up another $2. You have Bank of America up about 3%. Goldman Sachs is positive. Morgan Stanley is positive. When the financials are green on the screen, that's a positive as well for everything. So not a bad day out here for markets.
Yeah, for the country, it's another story, which just shows that you, like you said, you can't trade the headlines. You got to trade the charts.
You have to trade the charts. I mean, that is what's going to keep you on the right side of the trade. I mean, all of the people that come over to my service, I don't put out a million trades. I like to predominantly stay between, anywhere from 7 to 8 trades live at any given point. When we get out of one, we shift into another. We watch the money flow, and we consistently pocket gains. And that's what I try to do. But more importantly than anything is to be on the right side of the market. If you're fighting the market, that's ultimately where you get hurt. And again, right now, today, everyone would think after what went on throughout the weekend with all these protests, which isn't a bad thing, but the rioting is absolutely terrible. And, that took place, the looting and all of that. But the markets are green across the screen, and that's really all that matters when it comes to trading.
Yep, for sure. And even gold and silver are up as well.
Well, today we have the GLD up 17 cents, so it's kind of on the flattish side. When you look at gold, I think the August contract, I think it's trading right now down $6. So it's kind of a flat day, but gold miners are having a decent day, up about 58 cents. I wish they would pull back a little more personally, but, and then you have silver. Silver's up. So really, it's not a bad day for the precious metals.
Right. So silver is up, and it's been way outperforming gold.
It's a powerhouse. And we talked about that chart. Here's the deal, though, with silver at the moment. We are now in a confirmed uptrend. But what we got to see a little bit of a pullback or a consolidation base to set up the next move. I was hoping that we would start to see it, but honestly, this thing has been a powerhouse. So again, I'll be watching these charts closely for everything silver, but really it's been tremendous. But it is a little bit high on the chart for my liking at the moment, but the trend is up.
Right. So a consolidation that would take it down 5-10%. Is that what we're looking at?
I'm not so sure about the percentages. What I would say is let's just watch that pattern. Let's see what develops, and that will tell us when to pull the trigger on the next trade to the upside. But, I like it ultimately to go a lot higher down the road, just at these levels here. I mean, just think about the run on silver futures. You've gone from 15 to 19. I mean, that's an incredible move percentage-wise. People just don't grasp it sometimes, but that's a tremendous, tremendous move recently.
Yeah. So, yeah, It's just been the best performing asset class out there after being probably the worst performing asset class for many, many years. So it's interesting that something goes from worst to best really in the matter of a few months.
Well, that's how it works, though. And remember, when I was talking about silver, I was getting emails. People were laughing at me, right? So, again, that was in late April. I was saying, hey, silver's setting up on the charts. It looks really like there's going to be an explosive move happening here. We did it a couple times with call options. I actually own the SLV. And now here we are. You're looking at silver back then was, $15 an ounce. And now you're talking about $18.65 an ounce now. So, people don't understand. It's all about those chart pattern setups. When those patterns form, they're talking to you. They can't really, gold, silver, it doesn't matter what the equity is. They can't come out and verbally communicate. How they communicate to you is when you look at that chart pattern and you see what's evolving there, and then you get that big explosive move.
Yeah, which we have certainly had, and it continues on. So what about the other sectors we've been following? Restaurants, housing, travel, airlines.
Yeah, so
hotels.
We could talk about the restaurant stocks today, which have been doing pretty well. Today they're taking a little bit of a breather overall. So as you know, I own McDonald's. That's basically flat, up 10 cents on the day. Not a big deal. But the housing sector has been very, very strong, and it continues to remain very strong. In fact, Toll Brothers last week had earnings. Stock gapped up, pulled back a little bit, but all of the home builders are really strong charts right now, and they continue to show potential upside to come. And then today we have a nice little surprise in the airline stocks. I mean, I've been saying I own Southwest, and I still continue to own it. Today it's up over $2.20. Even American, which has been the one airline which has been the dog with fleas, that's up 78 cents. It's an $11 stock, but now you're talking about a 7.5% move. So airline stocks today are reacting really, really well across the board, and that's a positive. I mean, when you have we continue to see money come out of select areas going into other areas, and that's what you want to see for a sustained rally. And I think we are seeing that right now.
All right, so restaurants looking good. What about department stores? I mean, they've taken a real hit from these riots. Hundreds of Targets are shut down, and for some reason they didn't go after Walmart. I don't quite get that, but I guess Target's a more attractive target. They're headquartered in Minneapolis, in Minnesota.
They're a Minneapolis-based store, so I have to think that's probably part of the equation. That stock today, Target being down about $3.31 at the moment, just shows us that probably is an isolated play. But I have to say, the retailers today overall look pretty decent. There's really, even Foot Locker, which was sells sneakers, that was looted really to death across the country, and that stock's actually up $1. So again, you got to just watch these charts, but the retailers have acted a lot better as of late. Even Macy's, which has really been the poster child for bad action. The stock is at $6.60 today, but it's up 25 cents, and it's off of the lows. You got to remember the lows here in the month of May for Macy's was, his stock was down to $4.65. So that's a tremendous percentage gain recently for Macy's. So retail, in my opinion, is starting to look a lot better.
Yeah, all of this, that's counterintuitive. So ignore the news and look at the charts.
If this doesn't prove it, I don't know what to tell people. It's so funny, but, this is why this business is made for a different type of thinker. You have to really be a contrarian because, I should probably read out some of the emails sometimes that I receive. But, in March when I was telling my membership saying, hey, this is an excellent time to get involved. We're not going to overload ourselves, but, the market should be shifting here. People were basically laughing at me. And here we are, way off the March lows. And I've been consistently saying, hey, we should continue to go higher. And I can't tell you, what people tell me. They think I'm absolutely nuts.
Yeah.
But it's just the charts. I'm not really doing much else. It hasn't been all that difficult to read.
Yeah, well, one thing has happened after this weekend. I think the quarantine's kind of over. I don't think anybody's going to be paying attention to it anymore.
Well, I mean, if you see what's going on here. Quarantine has taken. We don't even talk about COVID right now with the rioting that's taking place. Unfortunately, that's a sad way to go about it. But we'll see if this country can start to open up. I mean, you're going to have to get some of these governors that are still trying to put the can on things to let this economy open up and go full throttle. And hopefully things will continue to progress here to the upside. Yeah,
let us hope. It certainly has the appearance that it's going to, doesn't it?
To me, it does. So, I've stayed firm on what I've seen, and I've shared it with everyone that's been listening to this program. So if they've been listening, we've done a pretty good job. And believe me, I'm not a perma bull. I'll be the first to tell you when the market's telling me the other way. I'm a trader, and we want to just be on the right side of the trade. As I always tell everybody, I don't care if the Dow Jones goes to 1,000,000 or if it goes to a penny. I just want to be on the right side of that move when it happens.
Yeah. So on your Twitter feed today, you took a gain on EEM calls.
I did, and that's an equity I've been in since late April. And the reason why I took the gain was just simply for the fact that it hasn't really reacted. The stock has reacted. I mean, the equity has reacted well. The ETF, it's gone up in the direction. I had $39 strike on it, and it's gone up where I want it. It's just not really giving me the juice behind it. I'm not getting that nice surge that I thought I was going to get in the equity. And sometimes when that happens, it's better to just look elsewhere, take your money off the table, and like I always say, I'll take my ball from this playground and go to another playground.
Yeah. Yep, that makes sense. So you freed up some capital, you got a profit on the deal, and now it's find another opportunity, right?
Yeah, I mean, this is an equity at 38 and change where it's trading right now. I thought I'd be up 40, 50%, and it's up 11%. So when something's just not, working the way I like it to work out, I just take it off the table. So my initial target obviously was much higher, but like I said, it's just not performing the way I want it to perform. And we'll move it over to another opportunity maybe later today.
Yeah. All right. Good. Well, you'll keep us posted on that. Anyways, that's it for today. We will pick up where we left off tomorrow. Make sure you go over and check out Nick's site, inthemoneystocks.com. The Twitter feeds at ITMS and at Nick Santiago 01 and at Kerry Lutz. And hey, Nick, we'll resume tomorrow.
Sounds good, Kerry.
This concludes another episode of Daily Market Wisdom with Master Trader Nick Santiago. For more information, go to inthemoneystocks.com and see Nick's full trading record, or check out the Twitter feeds at ITMS and at Nick Santiago 01.